Okay, hi guys, welcome to February 2nd, and I'm Greg, and we'll be sharing with you today the Chinese New Year effect. And in the end, we'll have some update for you guys about the assets that we asked you to buy, for example, gold and euro, right? So I guess you're profiting right now. So I guess we'll start with the Chinese New Year, right? So there's an effect called January effect we know in global wise, okay? So, but there's also a January effect of Chinese New Year version. So that really plays an important role in the stock markets in the East, maybe globally. So I guess it's really hard to believe that this effect really has to play an important role in the world because after all, it's just Chinese stuff, right? I used to think the same way, but anyway, my philosophy in the past 2 decades of in investment is we'll do the statistics and math. Math doesn't lie, right? So we did the statistics. We found out that the accuracy of Chinese New Year January effect, that the accuracy is way above 70%. So statistically, if that's more than 70%, that's a really reliable effect that really have to take a reference of. So right now, why does it happen, right? So after the statistics, so statistics is the fact. We cannot object, we cannot against the fact, right? But any reasons supporting this effect? This effect, for those who doesn't know what January effect is, if the first day of the trading day in points it is going up when it closes, then that's called we call it Hongpan. Is like is there's an effect, it's positive effect. If it's use a positive return in the first day, that means 70%, more than 70% of chance the whole rooster year of rooster will also yield a positive return. So that is really a big thing to claim, right? So why does it happen? Because in the East, Chinese used to pay bonus. There are 2 dates. One is in Christmas. One is in the Chinese New Year, which is around February. Usually is mid-February. So every 4 years it will be January like this year, right? So we as Chinese will save up the money, and the only place to invest, only time to invest is the first day after the Chinese New Year holiday, the first day, right? So that is the how the original of the origin of the Chinese New Year January effect. So right now, we see that imagine where Chinese live, right? Hong Kong, Taiwan, Malaysia, Singapore. All right. So in China, of course, right? China, Chinese live in China, right? But Friday is the day all the Chinese markets will all open up by Friday. So the last index that hasn't opened is Chinese Shanghai Composite Index. It will open tomorrow. So we'll see that. That means tonight, your time tonight. If that's the U.S. time tonight, okay. So we'll see if there's a January effect going on in Taiwan. So unfortunately today, so this is end of day chart. Today Taiwan index closes below last trading day. So that's a bad news, though it doesn't have any January effect. So what about Hong Kong? As we have updated yesterday, Hong Kong has no January effect. The point down, okay? And we can see Malaysia, right? Malaysia was doing really good, right? But the stock market opened really early, so it's in January 31st. It is the third day, I believe. It's the third day of Chinese New Year. So obviously the candlestick is really bad. So it didn't yield a positive return. So what about STI? Bad. This is not the day. This was the day. Okay. So there are two points that I want to make. So you see the globalization is really playing an important role. So the US market is highly correlated with the DAX, we know that, and the DAX is highly correlated with the Euro index, and the red side of the stock market is highly correlated with the Shanghai index. How and 10 years ago it used to be only US news and maybe a little bit of Euro news. So nobody really care about the Chinese market. So right now, when Chinese markets closed and Hong Kong market closed, then in the west side in the morning they will talk about the Chinese market and how the Japan Nikkei, we always talk about that then, right? So right now the correlation is really high. So first point is right now last chance is by Friday we will look at the Shanghai index. If it yields a positive return, so that each side of all the stock markets from the east may get a good solid January effect, right? So that's the first case. And Hong Kong and Taiwan among all these markets has the highest correlation with the Chinese Shanghai index. And among all the markets themselves, Taiwan and Hong Kong, they have the highest correlation. It's more than 0.4, right? So that if they are all highly correlated, how can they not play any role in the Western stock markets, right? So second point is, if we don't have the January effect this year, does it mean this year we're doomed? It will for sure yield a negative return? No, that is not what the statistic is about. It's only about if the first trading day the points are up, then it has a January effect. Then it will also have 70% yielding a positive return by the end of the Chinese New Year. All right, but it doesn't talk about if the stock market the points are down. It doesn't talk about this case. So, well, we don't have any good reference for the year of Rooster for sure. But does it mean that it's bad? No. Technically, in short term, among all these index, the best is STI, the Singapore index. It's been doing really well like now. And then it kind of have two buying signal right now, the candlestick and the overlays. So it is pretty good investment for mid to long term. All other index are pretty bad right now. The other one in mid to long term is Taiwan weighted index. That should be pretty good as of now. But other index like Hang Seng, I bet we really have to look at the Shanghai index in order to decide the trend. So other updates about for other index, for example, we asked you guys to buy a bit of gold. Just yesterday, you have been profiting, right? Today, if you see the update, I know that 4 of you subscribe, right? I'll bust my butt off, okay? I'll try my best to build this channel as what I did for the Chinese channel, right? So just follow me, right? I may not have the best English, but I believe investment is a global thing, right? It's international. It won't be limited by languages. It shouldn't be, right? So right now, if you see the chart, it's going up. Right now, it's hitting $12, $15. So by tonight, if it confirms breaking above this highest point, 12.20, then gold has a really good trend coming up. So you should buy some gold. Maybe we're panicking. We're not sure about the economy. There's so many uncertainties, stuff like that. But technically, we see a trend. And fundamentally, we see the US dollar and especially the Fed say that they're not going to raise any interest rate now. So the US dollar keeps on dropping. If you don't believe me, see. The latest candlestick is also a dark bearish candlestick. Technically and wave theory wise, it is really ugly. It's really bad. Again, please find something to invest in your portfolio that will benefit from the weaker trend of US dollar. Again and again, I'm telling you, 100.7 once it's breaking below, the trend is really bad. The next support is 98. You don't want to wait to 98 to invest or to just to protect your capital, right? Your money, right? So not only that you want to profit, is maybe you're buying some stock, but you don't want to cut loss. You want to keep the stocks, but you can buy some gold or euro to hedge, right? So euro is another kind of good asset to invest. Again, it's going up today. So if it breaks above the 1.08123 level, the trend is going up for sure, right? So this is most likely the bottom, like the big ultimate bottom. Okay, so it's the absolute bottom. The chance is really high. So anyway, if that's just a rebound or absolute bottom, I don't care, right? So technically, we will see phase by phase, stage by stage. If it breaks one stage, we can hold up to another stage, and then we can bring the cut loss level to cut gain level, and then we can put it higher and higher. Then eventually, it will slowly come into place in our portfolio, playing a more and more important role. So that's it for now. What I can update you guys. So I guess the next checkpoint is today. See how the US dollar goes, and I guess the markets, the Nasdaq is pretty good. It's okay, but the Dow Jones is pretty bad. So as long as the Dow Jones doesn't break below the 19,600 point, this level is still okay, right? So that's basically it, what I can update you guys. Hopefully, please smash a like button. So if you see that I will put some good effort into the clips, into the videos, please make sure that you viral a bit more, and make sure you subscribe our channel, and we will update you more about investment and what we know as a research team. Or if you know Chinese, you can search for my name, and the Chinese channel on Facebook and YouTube should be the biggest in Hong Kong and in Malaysia and most of the Eastern markets right now. But if you don't know Chinese, you can still subscribe to the channel just for the sake of curiosity, right? So hopefully I can finally see some comments. I see one right now, but I will still try my best to update you guys what we've got in the. We're currently staged in Hong Kong. If you want to know more of my stories, I'm the CEO of the Education Center, and our research team is now currently 6 people, and we're adding up to 9. I believe I will have good chance of hitting big time in the Chinese market, like the Chinese, like as a whole, who speak Chinese and read Chinese, right, in Malaysia and Taiwan. So if you know Mandarin, you can subscribe my Mandarin channel. So just search my name, Gregory, and that's it. So hopefully I will see your comments and get to see you guys. Maybe you're in the UK, US, or maybe you are my Hong Kong fans. So I tend to talk a bit more here. So maybe you want to know more about investment. Maybe just subscribe, and please share the videos to your friends. If you want more, subscribe. Okay. All right. So you can check out my other videos. So see you next time. Bye.